Based on that, Portfolio Manager at Makwe Fund Managers, Phaswane Mphahlele, joins us to expand on the latest market activity. Good evening to you. A better day, really, and a good one to start off this week's trade. So what dominated the global market developments?
Good evening to everyone. Following last week's breakouts in major asset prices, investors today have started the new week more on a muted space as they pick up some profits, but more to do with the fact that they're focusing on this upcoming data that is coming up this week. Investors are focused on what's going to be on the service PMI. Will they be able to continue to support the global growth in relative to the manufacturer that is stabilizing, looking like it's coming out of recession? Investors are looking into whether the jobs data in the U.S. will remain resilient or not. They were looking at the ECB's rate decision later in the week. Investors are also looking at China or what is going to happen out of that government annual key meeting, that they will give their growth target out for the year, and anything that is above 5% will be a positive for the markets because it will be indicating that China is willing to work to help its economy rebound. Meanwhile, anything under that would be indicative that they're still having troubles. The government still has a lot of red tape and business will not do so well. Local investors will get a chance to also look at our local GDP number coming out of tomorrow. An indicative expectation is remaining of a growth that will help South Africa avoid a technical recession on that front. So investors are focused on a lot of economic data coming up this week, and that's what they've been doing most of it today.
As a result, where does that put commodities?
Looking into the commodities, it's been more bullish. I must say the commodities have been more bullish, and this is at the back of the thesis around the fact that reinflation is taking place. The thesis around reinflation is taking place. We can just look at the commodity index right now. It was playing around more 2%, and it's taking a bullish stance now, being a more bullish stance when you talk technically in terms of the graph. But now, and this is at the back of the fact that when you look at the likes of oil today, that managed to be up higher by 0.6 to $83.80 an ounce, adding to last week's gains of around 4%, and last month we're now adding to around 9%. And this is at the back of today's gains. We're just seeing the fact that there's OPEC through Saudi Arabia, they say they'll continue with the supply cuts. And when you look at the Middle East, uncertainty ongoing is indicating that there's still some surprise support for the oil prices. Another contributor there in the index is helping them is the oil price. It was higher by 0.8, hitting as high as $2,099 an ounce, and this is something that is new we've seen this year. And this is at the back of the easing dollar, whether you're going through the dollar and the bond yields. And further to support that is the fact that there's been rate cuts that are ongoing and that are priced in that will be greater than 50% in June, that are supporting the yellow metal. And we can't forget copper, of course. It's the barometer of the global economy. It showed up at 0.5 today, around 3.9, and that is at the back of the fact that we're seeing that China is bottoming out. The global industrial activity is also bottoming out, showing some stability and giving some bullish momentum around the copper prices.
As a final shot, what's to be said about emerging market currencies, including the local rand?
Looking into the emerging market currencies, we can't just speak about them without highlighting what's going on with the dollar. The dollar is going for its second week of losses, and this is at the back of whether you consider that the economy is going to be reinflating or whether the rate cuts that are going to happen. But it is looking like it's been signaling the short-term duration that it is going through some breakdowns, and we're seeing failing to hit that 104 level and above again. And there's implications of this on emerging market currencies is that we're seeing the likes of the Russian ruble. It's appreciating when taking into consideration what's happening with the dollar, and further support is coming from the fact of higher oil prices. We're looking at the Indian rupee that is continuing to enjoy gains around 82.8 against the dollar, and this is at the back of the fact that the local data is continuing to be positive. When you think of their GDP numbers, it was around 8.4, greater than what market expected of 6.4, and further to that having to be boosted by continuous foreign inflow into the economy. We saw the stock market hitting more and more all-time highs, showing that it is helping support the currency. You can consider the Brazilian real GDP numbers were stronger. We're looking at a manufacturing PMI number that came out to continue to be relatively stronger, helping to deal with that implication of the cutting of interest rates that is trying to take place in the section of the economy. Looking at the Chinese yuan, there we're seeing Chinese yuan that is It's not getting a lot of demand, and I guess it's going to be at the back of the fact that the whole the NPC, the annual government that is taking place, investors are doing a hold and see position to see what would happen to that growth target we were speaking about earlier on. If it is above 5, or good for the Chinese yuan, but if not, we might see a different direction from there going forward. Closing it down with the rand, we're seeing the rand has also appreciated there. It's sitting at around 1901, and this all thanks to the easing dollar. Of course, we're seeing easing bond yields and the positive print that is going to be expected from GDP coming out from tomorrow. And that's not the fact that the commodity prices have done so well and supporting our currency, the commodity currency.
We'll leave it there with Phaswane Mphahlele, Portfolio Manager at Makwe Fund Managers, as we take a closer look at where markets ended a slightly better day.